Quite a lot has happened in the world of digital currency since the previous monthly update. The big talk heading into May was all about the Bitcoin halving event, and as to be expected, there was a lot of buying around all the buzz in the lead up to the event before a round of profit taking kicked in on the fact. Still, the crypto space has held up well into the profit taking, and Bitcoin has been considering the establishment back above 10,000 against the US dollar. On the whole, the cryptocurrency market has been a major outperformer in 2020, easily outpacing stocks. Looking at year-to-date performance into the week ending May 16th, 2020, Bitcoin is up 32% and Ether is up 55%, while stocks are down about 12% as reflected through the S&P 500. Against the backdrop of unprecedented quantitative easing and government stimulus, the case for crypto has become all the more compelling as investors are increasingly drawn to the economics of a currency that is completely decentralized with a limited supply. And major investors in the traditional financial market space are waking up to this fact, with the likes of Wall Street giant Paul Tudor Jones announcing his portfolio exposure of 1 to 2% in Bitcoin. Other big league institutional names have been jumping on board as well, while Facebook's Libra project has come back up from the dead with new changes announced that aim to provide a credible path to their digital currency in the hands of 1 billion people later this year. China has also been active, launching a pilot project for its digital yuan with a target to fully replace cash by 2022. Meanwhile, open interest in the CME Bitcoin futures contract hit record highs. It seems the coronavirus pandemic has served as a kind of acceleration mechanism to the digital future, with great strides being taken in just a matter of weeks. Obstacles that had both discouraged and prevented institutional investment in the space have now been significantly reduced as proper infrastructure and regulatory guidelines are laid down. And so, with all of that said, we believe this further strengthens the foundations of the rapidly maturing asset class of cryptocurrency, helping to solidify the encouraging prospects looking out to the medium and longer term time horizons. At the same time, we continue to warn against bullish expectations over the coming weeks, with the market having run so far and fast, and also into critical resistance with Bitcoin staring at the 2020 high around 10,500. It's important to remember that while the medium and longer term fundamentals for Bitcoin are fundamentals that recognize the asset as a store of value, on a shorter term basis, Bitcoin and cryptocurrencies by extension are still considered to be an emerging market. While we recognize the value proposition of Bitcoin competing with gold as a store of value looking out, on a shorter term basis, Bitcoin still shares some correlation with global risk appetite, and as such, with risk markets looking vulnerable to another big downturn as the global economy struggles to recover in the coronavirus aftermath, it won't come as a surprise to see another downturn in stocks met with another sizable pullback in crypto towards the end of the second quarter or into Q3. Of course, much like was seen back in March, any pullbacks are expected to be very well supported by those medium and longer term players who will look to increase exposure playing into the longer term value proposition this new asset class has to offer. That's all for now.